Hello and welcome to Free Lunch here at Zacks. I'm your host, Ben Rains. U.S. indexes swung between small gains and losses Thursday morning. This came one day after the Dow, the S&P 500, and the NASDAQ all climbed to put a stop to 3 straight days of declines. U.S. stocks popped Wednesday after China said that it will roll out new efforts to support businesses amid coronavirus setbacks. But Wall Street is still waiting for the spread of the virus to slow in order to better understand the global economic impact. Meanwhile, Morgan Stanley made a splash Thursday when the firm announced that it would buy E-Trade in a $13 billion all-stock deal. The takeover is the biggest by a giant U.S. bank since the 2008 financial crisis. The merger will help reshape the historic investment banking powerhouse because E-Trade is geared towards average retail investors. E-Trade, which will keep its brand name in its commercials, saw its stock price soar 26% Thursday. Meanwhile, Morgan Stanley dipped 2% Thursday morning. On the earnings front, Hyatt Hotel stock popped nearly 5% after it posted stronger than expected Q4 earnings and sales. Avis Budget stock, meanwhile, soared over 20% after the car rental company beat fourth quarter Wall Street estimates. Plus, the company's CEO said that the final month of the year was, quote, the single best December I have seen in the United States in my career. Zillow stock also surged over 20% after the online real estate company's sales continued to climb and topped quarterly estimates. Looking ahead, Fitbit, Dropbox, First Solar, and others are all set to report earnings after the closing bell. And that does it for the news portion of Free Lunch, but stick around for today's new Zacks Rank #1 Strong Buy stock.
For today's tech tip, we will be exploring the Zacks Style Scores system, a proprietary rating system that highlights key fundamental metrics. Pull up any ticker page on Zacks.com and click the Style Scores icon. From here, you will be able to compare the stock's most important value, growth, and momentum ratings with those of its industry rivals and broader group averages. Have a question about using Zacks.com? Send us an email and we might answer it next.
Lunch. Today we're breaking down why Everi Holdings is a Zacks Rank #1 Strong Buy stock. Everi is a Las Vegas-based casino tech firm that offers a variety of gaming machines and services. The company also sells financial service-focused products, player loyalty offerings, as well as intelligence and regulatory compliance solutions. The stock has soared over the last year and it hit new highs again Thursday, but Everi is still what we would consider cheap, which might attract some investors. So let's dive right in. As always, I like to start with a look at the company's website. Everi, they say it's a gaming services company. Basically, they make slot machine technology and then various other things that they say power the casino floor, from back-end stuff to games and various financial services. But you can think of them as a casino tech firm that makes slot machines and more. So now we're going to jump into some of their stock price movement recently. So we can see this is over the last 3 years, and they trade under the ticker EVRI. The stock is up over 340%, which really easily beats its industry's average of about 56%. And then if we go over the last year, we can see that the stock is up about 90% over the last 12 months, which easily outpaces that industry's average of 26%. We can see that they did fall slightly in the summer after they posted mixed earnings results, but then after they beat their Q3 results in early November, they're up really big since then. So we'll go to the last 3 months. We can see they're up about 13%, and their beat was back there. And now I'm going to take a look at the company's valuation, because along with its relatively cheap price point, which we'll get into in a moment, the stock's actually now trading at a discount to its industry in terms of forward earnings as well. So we can see that it's trading at about 23.5 times forward earnings, which marks a discount compared to that business services industry average, and it's come down significantly from where it was just at the 12 months ago. So now we're going to go ahead and take a look at what to expect from the company going forward. And before we do that, we should note that they're expected to report their quarterly earnings results on March 2nd, so in a couple weeks from now, as March is quickly approaching. So pay attention to that if you're thinking about buying the stock ahead of earnings. And we can see that it's trading at about $14.50 per share at the moment, so well under that $20 threshold that most investors would consider cheap. So looking ahead, we're calling for their Q4 revenues to climb about 11.6%, with the bottom line expected to jump from a 4 cents per share loss in the year ago period to positive 8 cents per share. So really impressive bottom line movement. We're calling for 250% growth on the bottom line for fiscal 19, and then another 65% growth in fiscal 2020, all the way up to 58 cents per share. And right now we have in NA, we're just a little glitch in our system right now, but we're calling for 11% growth overall for fiscal 2019, and then another 9.2% growth in the next year for the company as well. And we can see that their longer term earnings estimate revisions have trended in the right direction, and they do have a solid history of bottom line beats. They matched in Q2, but had a big beat in Q3. 50%, a massive beat in Q1, and then they beat as well in the previous year period. And we'll close with the fact that the company, as we mentioned, presents solid value, an A grade for value, an A grade for growth, and an overall Zacks Rank #1 strong buy, and its industry, that business services industry, sits in the top 40% of our more than 250 Zacks industries at the moment. So Everi is certainly worth diving a little deeper into. And that does it for our episode of Free Lunch today. Make sure to also check out our new Zacks.com/promo page for a look into some of our services, portfolios, and more. Also, make sure to tune into Paper Traders, which is live at 11 a.m. on Wednesdays. Once again, I'm your host, Ben Rains, and we'll be back next time with more up-to-date market news and a new top stock pick.